The last time we caught up, it was the emerging markets that sort of underwhelmed in the numbers. Talk me through the geography of the world and how it plays out for G4S this morning in terms of strength and challenges.
Good morning, Manus. Good morning, Anna. The picture is that we operate in around 100 countries around the world, and that's, for us, divided into 6 regions. All of our regions, apart from one, grew both top line and bottom line in 2017. And what we flagged early last year was that we saw a slowdown and a contraction coming in our Middle East and India region, and indeed that was the picture that we saw for the full year. And I think one of the things that the results show is that because we are geographically diversified, it means that when one of our regions around the world slows down or contracts, the group as a whole still continues to grow. And so we posted, I think, another year of profit growth and strong cash generation, notwithstanding a slowdown in the Middle East. India, we continue to see very strong growth in the United States, which is our biggest market and our biggest business today, and good growth in Europe.
Ashley, good morning to you. When you look at the structure of your business, and you've outlined nicely there the geographical spread of it, clearly there's a lot of worry about outsourcing businesses at the moment, given what's happened to some of the competition. How do you see yourselves differently to some in your sector or linked to your sector that have come unstuck?
So G4S is really a global security company, and outsourcing, as defined typically, is a small part of our business. It's 7% of our global revenues. It's a good business in our case. And I think what we've seen in other parts of the outsourcing industry is quite different. These are long-term construction contracts typically, which we simply don't participate in that part of the industry. So most of our business, 93% of our business is in cash solutions and security solutions. And we've not run into the sort of problems that we've seen in the outsourcing industry over the last 12 months. We're a different business fundamentally.
Where does the next leg of growth come for you? One of those sort of factoids, you've just won this Brussels contract, the airport business. Where do you take the business next? You've pared it back. You're the man that has tried to steer this company after quite an expansive and acquisitive period. Where do you take it next for growth, Ashley?
So I think we continue to see good growth opportunities in our developed markets, so Europe, North America. We see some sign of returning growth and recovery in Africa and Asia, and we think further down the track, Middle East will come back at some point, probably 12 months down the track. But developed markets in particular are a very interesting opportunity for us because we're increasing the technology content in the delivery of our services, and that is finding very good traction in North America, Europe and the UK, and we think we'll continue to see good growth there. In time, we'll take that technology and push it out to our emerging market businesses as well.
Let me ask you, I know you're spread across the world, Ashley, and you've made that point, but in terms of your UK contracts, UK government security and detention contracts, how do you see those evolving? What kind of pressures do you see on government pockets, government budgets that could impact you? So, as I said earlier, those sorts of services, or care and justice services as we refer to them, represent 7% of our revenues. We have really 2 markets, the UK and Australia. I think we have a slightly more positive view on growth opportunities in Australia. We don't, in the next 12 to 24 months, think there's going to be much new business in the UK market. There may be some, but we have a fairly cautious stance on that business segment in the UK in the next 12 to 24 months.
Actually, one of the things that has irked the market so about Serco, Capita, etc., and some of your peers is the debt. So talk us through your debt profile. We've written a piece. I don't think you'll smile when you read it. Thatcher and Blair's private army takes a fierce kicking. That's according to the Gadfly columnist here. But they're talking about your debt, they're talking about Serco, they're talking about Capita. So what do you say to the market in terms of your debt and in terms of the ratios? Are they coming down?
Our financial position has strengthened enormously. It's now just over 4 years since we set out our plan to transform the company. Since 2013, we've generated over £2.5 billion of operating cash flow, and that's put us in a good position to not only invest in technology and our productivity programs, but also to bring debt down. And this morning, when we reported our full-year results, we met our target of bringing net debt to EBITDA below 2.5 times. So I think, again, that's quite distinctive about the business. We have a strong balance sheet, and we enter 2018, I think, on very strong foundations. And we feel good about our growth prospects over the next 3 years. And that, of course, is reflected in the 5% increase in the final dividend that the board is recommending to shareholders.